Hey traders, Raghee here. Welcome to Charts and Coffee. Hope everyone's doing great. Happy Thursday, everybody. All right, so it's been an interesting week. Lots of sentiment, near-term sentiment that is quite bullish, meeting up to levels that we've seen selling pressure before. And I think I baked some noodles with the commentary and the title. I loved that tantalizing title on yesterday's free video, which you can check out over at the Simpler Trading YouTube channel. And if you do have any questions on chop versus trend and how I go about entering, of course, managing risk, I could be wrong, right? I mean, that could be, this could be the prelude to higher highs, but we always want to remember nobody knows. We want to know where price has to go to before we want to do anything, before it's actionable. And then what, the past has taught me is just run the play that's best for the current view that you have. And then in other words, of course, strategy only comes after understanding the structure or the market trend or the environment, whatever resonates with you. So that's what I've got going on. So let me contrast a few things, because to be expecting the broader indices potentially to be reaching an overbought resistance, a ceiling, right? Doesn't mean that I want to short everything. In fact, it doesn't mean that I'm short a whole heck of a lot to begin with. What it means is, at the broader index level, for example, here's your NQ. We haven't made a higher high yet. I mean, it's not the same as what's going on in the Dow and so forth. But we're just at a level where there are decisions to be made. Do buyers want to buy new highs? Do short sellers want to fade this move? This is not the same as buying breakouts through most of 2021 and clearly not through 2020. But doesn't mean that we can't be long. We just have to be selective. So what are the kind of long positions that we're in? Well, I'll mention this one because one, it was fairly recent, and two, this one was specifically alerted in both the Sector Secrets Mastery and in the options room. And this is the regional bank ETF. This is where I'll buy the dip. Structure, right? Strategy. And that was back on the 13th where we bought the dip. And then now, clearly we're hitting up to higher highs. So that's the difference. So KRE is markedly different than, say, healthcare. Healthcare, to me, is quite different than what I'm looking at in our short TLT position, short bonds. In other words, bullish yields. And so make sure what I try to do is I try to make sure that the strategy that I'm using is a fit for the environment, for the current, and I don't mean the broader markets, but the current symbol that's on my screen. Trade what we see. I mean, in chop, it's unbelievably important. In overall uptrends, when the rising tide is taking everything up with it, then it's a whole lot, well, frankly, it's a whole lot easier to play broadly. But when we don't have that, we've got to get a whole lot more selective. And that's what's been serving, I think, us well overall. So hope that helps. Hope that makes sense. And hey there, Kawant. So the question is, how can we find a bottom or a reversal in Qualcomm? Sure. We're rolling right back into earnings. We've got to think about proximity to earnings. And if I am inside of 2 weeks before the earnings release, we know two things. One, earnings starts to take on a more and more significant role in the psychology and in the movement, and implied volatility starts to move higher. And inside those 2 weeks, I think that the shift from the edge that, say, someone like myself who likes to buy, be long calls, be long puts, someone like myself is going to lose a slight edge to someone who's writing premium. So the strategy does change based on time and proximity to the event. So as I get closer and closer, inside 2 weeks, implied volatility rises. It favors those who are writing premium, as opposed to folks like me who are looking at directional debit. So that's the first thing, a time consideration. The second thing is, you know, minus, take the time earnings catalyst away, and the structure of this market is most definitely down. We can see that through the double red. And even though we've most recently gone yellow, think about the trend that preceded. And I will say, you know what? Even though we're sort of a little bit more neutral now, thank you, grab candles, thank you, JT Multi, I'm not bullish. And I think what's really difficult is in this bullish momentum environment, we're seeing this in a number of places. Is that enough to say that the uptrend has reorganized? Or do we just have a chop that's wide enough for the markets to gain some momentum where it feels like an uptrend, or, but it's really still contained? So I think it's the latter, by the way. That's what experience has taught me, that, when certain indicators go blue, go yellow, we don't have the organization of that bullishness or bearishness that we once had. And that's really what's happening on the indices. So Qualcomm, and I think this, Kalwant, if you've been following the show or my work at all here at Simpler. I can't look at Qualcomm in and of itself. Qualcomm is the last thing that I'll look at. What I've got to look at then before Qualcomm is, what is the sector? What is the index exposure? What are the other stocks that are in those groups doing? Is the overall direction down? Are there other better downtrends? And, assuming that's already been done, and this is the symbol that you focused in on, that's cool. We're looking for a 1, 2, 3 wave reversal, preferably as this market takes out what is right now the resistance of the 200. So getting above that, getting above the wave, getting above the swing high, whatever it might be, all those are going to be required, ideally, for any kind of real, to your point, finding a bottom. Finding a bottom is a pattern. Finding a bottom is a process of breaking the previous double red, and for a more prolonged period of time, remaining more neutral, remaining double yellow, seeing more blue, grab candles. I hope that helps. All right, so next up is wrestling. Yeah, sometimes I'll keep ESPN on. Sometimes I'll keep whatever movie I feel like watching on on loop on. Lately, if there's anything that I'll sort of leave on as a productive distraction, it's going to be the Drive to Survive series, the Formula One series on Netflix, or the best, I'll just keep The Last Dance, that Michael Jordan, 8 or 10 part series. I'll keep that on just loop. Yeah, so whatever it takes to keep you in the zone. Cool. All right. Got some strong coffee going on this morning, Hal. All right. Caffeinate and dominate. I love it. Do I have a 1K asked, do I have a TOS shared multi-chart? It's not do I have the multi-chart, the shared file? They're in the room drives, 1K. The answer is yes. And they're in the room drives. I believe they're in the gold room for options and futures. And of course they're in the mastery. But they're not difficult to set up. But, if you're looking for that multi, so all it is, the upper left-hand corner, I'll put the index of the sector, and then I'll put the top 8 to 11 names, depending on what chart size is comfortable for you, the top 8 to 11 names. So for example, on TradingView, it's a little trickier. On TradingView, I would have to go with, do I have it here? Forex, Wave, Labs, Sector. There we go. So on TradingView, because the layout is affixed at most 8, I'll do the multi-chart like this. So we always have something on any platform that we can do. All right, next up is, how do I pick a good coffee mug? These are important things, right? So first of all, it's got to be really big. I mean, this thing's about as big as my head. So that's really the prerequisite for a coffee mug. It's got to be really big. And ideally, then it's a gift from someone, uh, my family member. Or just my favorite coffee mugs are the ones that, people that I adore, people that I love give me. So that's the best. Right. All right. Like the opening song, it's chill. Yeah, some people say it sounds like the Peanuts, which I love Snoopy and the Peanuts. And yeah, I like it. What's not to like about some piano, right? No, I agree with you. I love it. Okay, Tim, how far back do we go on the JT Daily multi-trend to determine that the trend that was? Oh, it's funny, Tim. We were just talking about that here in the office yesterday. What is that? So it's whatever the recent trend was. So let's use that Qualcomm example. So we can see that it's gone yellow for a single session most recently. But the trend that was is the one that simply proceeded. If it was established, right? The trend that was. So I won't go back to the uptrend here because the most recent trend that was down. All right. So I hope that makes sense. Many thanks for the video. Oh, right. No, I'm super happy about that. Of course, Tim. Yeah, the one that you and Sabrina had requested was the index and sector breakdown. Awesome. I'm happy to hear that. And thanks for the request. I do appreciate that. And by the way, while you're here in the show live, if you're catching this on a recording, if you have a question, feel free to leave it in the comment section here at the Simpler Trading YouTube channel, and while you're there, bump that like button. But yeah, if you have a question or a comment or whatever, leave it. I always find yesterday's free video, brought some of the best comments. Folks who disagreed, folks who agreed. One who thinks that I should be fired and that person should be hired. I loved that one. I really loved that one. But yeah, definitely leave the comments. It's always good to know what's resonating, what's helping, and that's the best way I'm able to, bring you better content and things that you all need. So Tim, thanks for asking. Absolutely. All right, next question, Melissa. Thoughts on gold? Yeah, great question. And I think gold is interesting because there's the real yield narrative that's obviously in play when you think about what the nominal yield of a bond is minus the current rate of inflation. That's your real yield. That real yield number has an inverse relationship to gold. You also have the US dollar, typically, that has an inverse relationship to gold. But remember that dollar conversation sometimes is a little overdone, because if you're talking about a negative correlation or an inverse correlation to a market, right? If anybody out there, if I'm talking about that, what I will do is I will bring up the daily time frame of, it's got to be matching time frames of both the markets. And if something has a negative correlation, the way that I have found the best predictability is they should really look like one zigging, one zagging. They should really look like if the dollar is in an uptrend, then gold should be at least weak or in a downtrend. And then you've got a really good negative correlation. So having said that, I don't think gold is in any trend right now. And if a market is lacking a trend, then I don't have an edge. And if I don't have an edge, I don't know that I have a lot of clear reasons to put my capital at risk. So it's chopping around right now. Chop means the closer I am to the bottom or top of that range, very much like the conversation we had in yesterday's free video, until I get to the top or bottom of that range. And by the way, there is a really good top to the range. Thank you, Darvis. Signals and levels. And there's a pretty darn good bottom. Thank you, previous low. This is the JP Morgan shenanigans, you might remember, or whomever, whatever that was, right? Here is another Darvis. Here's another signal. So there's your top and bottom. So the closer we get to, just call it a ceiling, call it a floor, call it resistance, call it support, call this overbought, call this oversold. It's all the same lingo. It means the same thing. So um, that's the language of CHOP. And then this is the reading of the JT multi that indicates CHOP. And you can see clearly when the trend broke and when it went sideways, not necessarily in a downtrend. So I won't treat this as a downtrend. I'll treat it as CHOP. So I don't have an edge quite yet. All right. Just don't have an edge quite yet. What do I think about XLI? Oh, Chris. Yeah. What do I think about XLI? Well, I'd like to take a walk into the woods with XLI and come back alone. That's what I think. So this is where we always have to, and I do, that's why we have stop losses. This is where we always have to keep in mind that no tool is infallible. And we have to entertain the notion that we can be wrong. And we have to entertain the notion that always remember, really, I have to remember and remind myself, and in reminding you all and reminding me, in downtrends, short squeezes, that bullish bias, the rising tide can be relentless. And so this is one of those situations where, sure, nice follow through. Hey, let's do it again. And guess what? Did not work. Did not follow through. One time, second time, asking too much. So what do I think? I think I should stay the heck away from this right now until I reach some sort of resistance level. Notice how I'm using the Darvis and the Darvis signals to identify them, and then additionally the 200. So I'm trying to use levels that are already pre-drawn, pre-identified, recognized on my chart. I'm not trying to use subjective manual levels. One of the main reasons I've got so many secret squiggles on the screen is because I'm automating as much as possible. I draw, other than when I'm here with you all or in the chat rooms, and I kind of channel my inner John Madden and I start, drawing all over the chart. I try to let my indicators do all the measuring, identifying. All I've got to do is count candles and dots, and as long as I can see my colors, we're automating as much as possible. So right now, what do I think? I think I should leave it alone. I don't have a buy, though. I do not have a buy. What I have is a market that's rapidly moving towards this area around 105.35, 105.70, that 35-cent range. We've got what I think could be an overbought market. And again, I don't say that subjectively. I say that because the previous trend was down. So actually, I love the idea at the Darvis or a volume ledge to fade that move and look for that. And by the way, a slight high and then move lower could happen. In CHOP, those slight all-time highs or slight higher highs can be very, very tricky. Okay. Yes, I'm watching volume, no doubt. Yes, I acknowledge that the market's moving higher off an oversold floor, but I don't have the structure that we had through most of this year and even through 2021. That's a buy the dip, gang. That's what stacked moving averages tell us, that, yeah, if you want to buy it through the higher high, I don't even do that in a trend, frankly. But if you want to buy through a higher high, that stock moving average says, yes, in the past, if you're looking at probabilities, double green is going to increase the probability that the market continues to move higher. And in CHOP, what I see is, hey, just remember, we may not have that same resilience. Okay. All right. Hope that helps. All right. So, I think that also, yeah, I saw the question about Bitcoin and gold. I think that clearly there's a little bit of an inflation competition there, where Bitcoin has in some ways taken on a little bit of a sort of gold-esque type play. I don't talk about crypto a lot, not because I don't love it. I'm a Forex trader. Crypto got on my radar quite early, but I'm a hodler. I'm a hodler. I believe in the longer term narrative. Yeah, sometimes the futures are okay to trade, but if I'm going to trade crypto, it's usually going to be using the futures Bitcoin contract, not trading Bitcoin on the exchanges, which frankly, I don't really love. But yeah, I'm a hodler. I've been in since 2016 and I'm not letting go. So anyway, that's as good a place as any to wrap up our morning. That 20 minutes sure does fly by. Whatever your process is, gang, stay true to it. I try to share that with you all here in the room, but whatever your process is, stay true to it. If experience has told you that this is the environment where you should do this strategy, trust it. And if you're in an environment where, you think to yourself, I don't have a lot of experience and I need to maybe understand what this environment means, well, you've come to the right place. So as always, thanks for the time. We are ever closing in on our live trading next Monday. So that still gives you today, Friday, Saturday, Sunday to review the class, simplertrading.com/extract. And we are going to be at it on Monday. Be good to each other. I'll see you tomorrow, same time, same station.